Ladies and gentlemen, welcome back to Data Dispatch. Hope you guys are all having a wonderful day. We see Palantir stock that has a great reversal along with the market that absolutely soars today in reaction to some bullish CPI data that is showing that some inflation actually came in cooler than expected. This gave a lot of momentum for the markets because, hey, now the hope and the probability of some more interest rate cuts coming in 2025 is back on the table. This goes up and down, and the emotions and the psychology that runs with this is pretty crazy. With Palantir having a reversal here, people are talking about its earnings coming up here. We're going to be breaking down some articles, reminding you some of the important details, and they have a new partnership that was announced today. So if you are a new or returning viewer, we're growing fast. I can't thank you guys enough. We're close to 23,000 subscribers. Hit that sub button, hit that like button. Of course, not a financial advisor. I'm collecting all the data and dispatching it to you. Now pop it up on the screen here. Palantir that actually closes at market close is at 68.14, up about 3.4% on the day. You can see a nice reversal here was triggered with some support in this reversal at this bottom at about $64. Now where Palantir currently trades in the Robinhood overnight hours is at 68.72, up about 58 cents. The question will be in the overnight hours here, and especially with the market that I think will continue to have momentum, in my own personal opinion, in reaction to the CPI data today, is will Palantir get back into the 70s? And if Palantir does get back into the 70s, then that would be very successful, considering the pressure that it has recently experienced in terms of selling pressure and the pullback that we have seen. Palantir does have some good consolidation here in the mid 70s. So with that being said, it could be a good zone for Palantir to continue to build some support on. Now, one of the big questions with Palantir, remember, is earnings was announced that it's going to be coming out February 3rd after the bell. That's going to be Monday, kickstarting the week. One of the articles here is that Palantir stock actually holds a market perform at Raymond James on these revised estimates. Now, talking about that, and of course we know valuation concerns, we could talk about all the time, price to earnings ratio 304. We know Palantir is trading at a very high valuation. One of the big things and a controversial thing about earnings, and this article goes into, is regarding the SARs, the stock appreciation rights, and whether that is being fully analyzed by analysts into the earnings prediction right here from Wall Street, or if that has not been. This is kind of varying opinion across the board, but nonetheless, this is a stock-based compensation, and the revision right here from this article on Raymond James is accounting for the vesting of approximately $120 million in stock appreciation, which were triggered at Palantir shares when they started trading $50 or more. They actually adjusted on their own personal basis the company's fourth quarter earnings here to reflect this compensation expense, and the updated model now projects a decrease actually in GAAP earnings by roughly 5 cents from the prior estimate of 6 cents down to 1 cent. So they're putting it into their earnings revisions. Not all analysts are. Some people are saying that this has already been priced in. This has already been reported in previous earnings. Some are saying, no, it's not. I guess the only true answer is we'll see what happens in due time regarding these SARs. Nonetheless, what that means for Palantir and in the market is a decent amount of volatility that could be coming up here in the near future. Palantir is trading at a high valuation, remember that. So if there's any strong connection with it, we could see a continuation of a pullback. But for anybody waiting for cheaper prices, hey, there could be possible opportunities if we see any flips in the market. But right now, bullish coming into the market, bullish momentum, and on top of a change in system administration, I think that's also going to be bringing some positive momentum into the market. Talking about here, Boundless Discovery Company that is actually announcing their partnership with Palantir, saying here a big thank you to the team at Palantir for their support and for providing us for powerful tech stack where we can use to change the way people and organization navigate our complex world. And if you look at the full statement here, what Boundless Discovery is, this is basically specializing in rapidly modeling complex solutions using open source information, and they have secured a multi-year partnership with Palantir. What this is showing me is that Palantir is just continuing to secure those wonderful contracts that we continue to see pop up in the headlines, both on the commercial and the governmental side of things, which is important for Palantir to meet the expectations of Wall Street in terms of the bar that it is setting, because Palantir is set at a very high bar right now. So we'll see what happens in due time. Do you think Palantir will be popping up back here to the 70s come tomorrow? Now, looking at the market, while we saw the broader market that actually had a very bullish day, you can see pretty much green across the board. The NASDAQ comes up almost 2.5%, along with the S&P up about 1.8%. Now, what we do have is investors reacting to a strong earnings report from several of the large banks that came in, and inflation numbers that actually renewed the hopes of the Federal Reserve to cut interest rates in 2025. Specifically, the CPI index, the Consumer Price Index for December, released this morning, showed that core inflation, which excludes volatile food and energy prices, rose less than economists had expected. And basically, the CPI numbers ease concerns that continued economic strength could spur inflation that would keep the Fed from lowering interest rates in 2025. Remember, we've had 3 rate cuts in September, but is warned that the pace of further easing will likely slow. So this is great. We saw more of a reaction. Remember when the Fed came out with a remark saying, hey, we're not going to see as many interest rate cuts than that we were originally expecting for 2025, which was 4. Probability came down to about 2. But now, basically, they want to stay with their target inflation rate. And with the CPI data showing that inflation is still kind of cooling off, it's been sticky, hanging around. This is great to see that we're having a cooling report that comes out here, showing that, hey, inflation is at least subsiding a little bit, which increases the hopes for the Federal Reserve to continue with its interest rate cuts, which is what the market wants. So it's what the market wants, even though the economy is being very resilient right now in terms of the numbers that it's posted, like with the jobs data that we got that really started to cause some furthering pressure and correction into the market. In light of this news, you see here the 10-year treasuries, which are really sensitive to rate expectations and probabilities. They say here they plunged, they dropped to lows at 4.64% after the inflation data compared to about 4.79%. So basically coming down about 15 basis point, saying that this is the biggest one-day drop for the yield, which affects rates on all sorts of credits, most notably mortgages since August. We do know mortgages are very high right now. They've been lingering on a lot of people wanting to get back to those pandemic days of mortgages at about 2 to 3%. We are seeing a reduction in home buying. I think I just saw a report on there seeing that it is starting to reduce a little bit. This could help the housing market. Other than that, we are also seeing here big stocks like Tesla soaring over 8% today right here. You also have mega cap technology stocks across the board that were higher. We're talking about NVIDIA, Google, Meta, Apple, Microsoft, and Amazon. Now, in terms of remember what happened with NVIDIA yesterday, remember we had the White House that imposed a new AI export rule regarding what chips and how many chips and where they're going to go, how many can be exported. The reason this came from the current administration here, they say in the last few days of it before it switches over, was they are looking for national security efforts, and NVIDIA is causing these new restrictions basically misguided. So the question is, what's going to be happening with this bill here? What's going to be happening with NVIDIA after the administration takes over in just a few short days on next Monday? Right now, there's a 120-day commentary period actually before this rule goes fully into effect. And with the incoming new administration, they could make some changes. So we could see possibly some reversal on this. However, what we're seeing is even some sides of the party right here are in favor of tighter restrictions on advanced AI chips. Basically, what you're seeing from a power standpoint, from a governmental standpoint, is looking at national security. The world is an AI arms race, and we are trying to keep the West on top of the leader in that race. So I can see why these restrictions are coming. However, I don't think they should be imposed crazy strictly. NVIDIA should be able to do what they want with their AI chips, considering it's just a business coming out of nowhere right here. at $136 right now, doing some great job of holding that support zone at about 130. So what do you guys make all this? Do you support NVIDIA having some tighter restrictions regarding their chip exports, or do you think it's a little over the top? And what's your opinion on Palantir? Is it popping back up to the 70s, or is this bubble going to come back down? Peace out, take care, and I'll catch you guys later.